Paul Tudor Jones says, "Get ready, the biggest rally of your life could end in disaster." Watch as Paul reveals which assets could soar, but warns, time is running out for safe exits.
Pretty well, actually.
Dan Schulman is chairman of Just Capital, so that's a great day for Dan, a great day for corporate America, a great day for America and capitalism.
Okay, so let me ask you about the markets, though, right now, because we have all these big headlines, including today. We have this OpenAI deal with AMD. AMD is ripping. There's these warrants. Some people look at these as sort of these circular deals. We had 2 weeks ago a similar deal with NVIDIA. We've got a big bank deal this morning. We're going to hear from Fifth Third's CEO in just a little bit. You were, I think, dare I say, very pessimistic the last time I saw you here back in May. How do you feel now?
Well, it's like the Prince song. It's 1999. Party like it's 1999, right? Feels exactly like 1999. I don't know whether we'll actually replay it exactly, but I think all the ingredients are in place. And certainly from a trading standpoint, you have to position yourself like it's October 99. I don't see why you would do anything but that. And remember, the Nasdaq doubled between the first week of October 99 and March of 2000. So if it looks like a duck and quacks like a duck, it's probably not a chicken, right?
But you think it's 99, and we were talking to Mike Novogratz earlier today. It's not 98. I mean, everyone's it's either 98, 99, but it's not 96, I guess is the point.
Right.
And that's a problem, potentially.
Right.
Or it's maybe an opportunity, but you have to get on and off the train pretty quick.
Well, if you just think about bull markets, right, the greatest price appreciation is always the 12 months preceding the top. So that's the nature of a bull market. It kind of doubles whatever the annual average is and before then. So if you don't play it, you're missing out on the juice. If you do play it, you have to have really happy feet, because there will be a really, really bad end to it. And my guess is that I think all the ingredients are in place for some kind of a blow-off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again. If anything now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. We were looking at 4 more rate hikes before we actually topped in 2000. Now we're looking at 3 or 4 rate cuts, probably at least. So you have monetary policy that's going to take us to real rates of 0 or less, probably, depending upon the next Fed chair. And then the big difference is, obviously, fiscal policy. We had a budget surplus in 99, 2000. Now we've got a 6% budget deficit. So that combination, that fiscal monetary combination, is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was crazy times, right, coming out of the war.
Well, you think that most people who are watching us now, you need to be in this market now. But then the question, as I said, is you have to jump off the train before the train crashes. If you're suggesting the train is going to crash.
I'm not suggesting the train's going to crash. I'm suggesting that we're in a period that's conducive for massive price appreciation in a variety of assets. Will it happen or not? I don't know. If you kind of just look, if you just think about the leverage that we had in 1999, you look at margin debt, and then you look at today margin debt, but you have to throw in leverage ETFs because people don't use margin like they did back then. We're probably a little more elevated than we were in October of 99. It will take a speculative frenzy for us to elevate those prices, right? It will take more retail buying. It'll take more recruitment from a variety of from long-short hedge funds, from real money, et cetera. It'll take a combination of those things. It's not going to go up without flows and without a story. The story's there. It's the combination of the most unique and aggressive fiscal and monetary conditions that we've ever seen.
Okay, if you're right, who are the winners then in that, and who are the losers? Because right now we're looking at an NVIDIA obviously being a major winner. Even AMD today, major winner, but there's this unique arrangement that's almost circular.
The circularity makes me nervous. I would say, and I'm going to think of it in broad terms, I think what the markets are telling you, this is an inflation story down the road. If you look at the biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure. There's a Morgan Stanley basket that's a retail flow basket that has all the meme stocks in it. It's up 67, 68%. So it's really what retail jumps on. So crypto, digital gold, that's obviously something that's very, very appealing.
And does that mean you're jumping on all of that right now?
Well, I'd want to have positions in all of it, for sure. So if you said to me, what are going to be the winners? Again, we have this race.
Right.
The race, realistically, is certainly to the end of the year, because that's when everyone marks institutionally. And then you have to figure out what's going to go on in next year. So what would I want to have? I'd want to have a combination of gold, crypto, probably the Nasdaq. I think, I want to say that I've said that before, and I think that's still the right one. And I think whatever the fastest horse is at this point in time probably has a good chance of being that on deck 31.